All righty, it is the top of the hour. Good evening, everyone, and welcome to Mastering the Trade Live. I am thrilled to introduce John Carter, founder of Simpler Trading, best-selling author of Mastering the Trade, and a full-time trader for nearly 3 decades now. John's signature strategies, including his famous squeeze indicator, have fueled multiple seven-figure trades. Tonight, he's pulling back the curtain on how he's navigating one of the biggest market opportunities since 2008, from timing explosive swing trades to wiring out $50,000 to $75,000 a week. Get ready because what you're about to learn could completely transform the way you trade. And if you have a free moment, please feel free to drop a comment in the chat tab. Let us know where in the world you're joining from. It's always very interesting just to see how wide of a reach we have. Fun times indeed. I went ahead and got a backup recording started to take care of the last questions that y'all typically have. We are absolutely recording this presentation. No worries about making your own recordings or screen captures, any of that noise. But the only thing you really need tonight is going to be your brain. And if you really want to take some notes, a pen and a piece of paper might come in handy. We also are going to have an open chat for this presentation. If you do see the Zoom chat tab or in the YouTube link as well, there's obviously the open chat there y'all are familiar with for those YouTube subscribers. We also have a Q&A tab in Zoom. So if you have any questions you would like to ask John or the team here in the back end, please feel free to use that. We do also post any of those questions that we answer to everyone as a group. So go ahead and check there. It kind of helps to not have repeat questions and just make sure your question gets answered. All right, I believe all the hard part is out of the way. The technology is working. The stage is set. The floor is all yours, John. I'm going to stop my screen here and let you take over. Take her away.
Awesome. Thank you, Daryl, so much. Of course, great intro as always. I'll say hi real quick to everybody and then I'll get off this because as traders, we really want to just look at what's at the charts, but just wanted to say welcome everyone tonight and happy Tuesday, happy pre-FOMC day. And it'll be awesome to kind of dive in tonight and take a look at a couple things. If you're on the webinar last week, it's definitely kind of a similar theme, although I've added some new information, especially on some of the big picture stuff that's developing right now. And then we'll dive into a few fun things. All right. GTG. All right. So let me kill that. And let me find my screen share. So we are going to share the entire screen and we're going to go with screen 4. All right. Perfect. And then I will get my drawing tool, which is a good plus. And these are some things I'll go over too. These are just some things I've been playing around with. I've been really fascinated by momentum in this market and just some ways to know when, this is the snow line. How do we know when it's going to blow past the snow line? And then how do we know it's going to die? And so just some kind of cool momentum tools. I'll be using these in our trading room and kind of showing you. I always love kind of solving problems in the market. And the one I found, especially over the last couple of months, is support going to hold? Is resistance going to hold? What happens if it's just going to blow absolutely right through it? And it's good to know, you want to know that because, you don't want to get in front of a freight train to short or a falling piano to buy. And if you're in it, you want to hold on to it as long as possible. So things like that are important. All right, let's go to the slideshow and talk about this. All right. All right, can you guys hear okay and all that kind of stuff? Yeah, it looks like all kind of good. Yeah, and Mark, I do trade multiple accounts. So I do have a seven-figure account that I trade. I also have a smaller account that I trade with my kids because I think that's a kind of a good learning environment. And I'm, all the things. And I think part of my challenge over the years is to continually systematize some of the stuff that I do. That's something I'm also undergoing. And as I kind of lock in and systematize some of the setups I'm doing, I will obviously share that with you guys because I find that, part of this, while I love trading, there is something to be said for, if you're not necessarily staring at the screen all day and the setups that you like and trust in are actually getting executed for you automatically, that's kind of cool as well. Yeah, so there we go. All right, so here we go. Let's just dive in. Disclosure, I always say, like, if you're trading, just don't sell naked calls for the love of God. There's fewer guarantees in life, but there's a guarantee that you will blow out your account if you just continue selling naked calls. You can sell call credit spreads with defined risk. I've met more people who have been more have their lives destroyed by selling naked calls because of that one time it got away. So don't do that. Okay, short-term cycles, trade examples, and more. All right, so the markets have shifted. I think one thing that's really important is there was a week of time. In 1 week, the US went from kind of a global superpower to just another country. And that was the week where I think it was like a month ago. And what I mean from this is from the eyes of Europe. Okay, from the eyes of Europe especially, but also in China and Asia. And all of a sudden it was, you had JD Vance in Europe lecturing people about, being woke, talking to, Putin behind their back, all these things. And this is not a political statement. I'm just saying these are facts. And at that point, everyone kind of woke up and said, wow, the US is not the superpower that it once was, and it behooves of us to start making solid trading relationships with each other. Okay. The world order literally changed. Now, that's not a good or bad thing, it's just a fact. And we want to take that into account as we kind of roll forward into what things are going to look like going forward as well. There's extraordinary re-asset allocation happening in front of our eyes. And the main question in all of this is that as traders, how do we take advantage of the uncertainty? So we're going to be talking about short-term cycles versus tariffs versus uncertainty and the best setups for this market. And and Mika, I take your point. You're saying like, hey, that's not a fact. Let's put it this way: it was thrown out there as it's forcing people to take action. Now, if we get to 6 months from now and everybody relaxes and it's like, all right, we're going to go back to the way things were, okay, that fair enough. But the main point here is that there are countries taking action that's unprecedented based on what they've been doing before. So we'll see kind of how it all plays out. But the main thing that we want to look at here is it creates trading opportunities. Now, one of the larger cycles that I have followed for a long time and that I believe is we're in the process of it's going to unfold here is this 18 and a half year real estate cycle. This is something that's been documented over the last literally 200 years. The most it's stretched is 20 years. On average, it's 18 and a half years. I think that this time around, it'll stretch a little bit longer, like 19 or so years, but not, instead of 18 and a half. But this is, if you guys remember 2008, we had the big financial crisis, and that was led by essentially credit risk and real estate, mostly residential real estate, and everything that followed after that. Stock market crash, there's panic, dogs are sleeping with cats, all the things that happen in that kind of a situation that's odd. That's going to happen again. And this is just something that happens. And, this is a, black swan event or whatever you want to call it. Now, of course, is there a 100% guarantee this is going to happen? Of course not. Anything can happen. But for every 18 and a half to 20 years of the last 200 years, this pattern has played out exactly the same each way, just the players have been a little bit different. So where are we in all this? So we are in May of 2025, and this was kind of the COVID dip right here. This was, we after the 2008 financial crisis, the real estate kind of bottomed in 2012, the markets, and we had a nice little bump. We had COVID. We picked things up again. We've been pausing here with all the tariffs and stuff like that. And all of this leads to one last gasp of essentially speculation into late 2026, 2027 before it can roll into another 18 and a half year financial crisis. So basically, the short version of this, and we'll talk about stocks specifically, but the short version of this is that if you're dreaming of buying your dream home, and here we are in 2025, now, look, if you find your dream home and you would buy it, it's irrelevant what price you pay if you can afford it. Just it's your dream home, right? But a great time, according to this, to buy real estate would be like in 2029, 2030. That's when, things are going to come down quite a bit. So, if you find a place that you like, you can rent, be patient, save your money. You'll make the buy of a lifetime in the real estate area at that moment in time. I can attest to that. We didn't, we bought a lot of stuff in 2008, 2009, some of the easiest investments we've ever made in terms of real estate. So bigger picture, we just want to understand that that's happening. Now, here's the most important thing that I want to reiterate tonight. So the bigger picture reminder, it ain't about tariffs. It's not about Trump. It's not about China. It's about one thing and one thing only, and that is global liquidity. Everything else is a 1000% false narrative trying to explain the ups and downs of the various markets. All right. This is the price of Bitcoin and tech stocks are correlated with global liquidity at a ratio of 90 to 95%. Okay, 90% with Bitcoin, 95% with tech stocks. This means as global liquidity rises, there's about a 12-week lag, then tech stocks follow and Bitcoin follows the most. Other assets follow, just not as much. Think of it this way. Here's global liquidity. Okay, here is the tech sector. Here is Bitcoin. Here is, real estate. Here is gold. All these different assets follow. It's just that tech stocks and Bitcoin follow, and crypto, follow the most. Other assets do as well, not as much. But the fact of the matter is, in other words, as global liquidity rises, assets rise. And so we want to understand that that is kind of the truth that's out there on planet Earth at the moment and will be for some time. And while we will likely have the 18-half-year real estate cycle crisis in 2027 to 2029, guess what? That will turn on the spigots to, you guessed it, increase more liquidity. Okay, just like in COVID, just like we saw in 2008, there's liquidity increasing right now. It'll increase at a faster rate, and even though there'll be dips that you can buy, asset prices will then explode. Okay, so what does all this mean? The process, this is the important part. The process of debasing fiat currency to service debt roller. Okay, if you guys aren't aware of this, we had something like, and these numbers are very like top of the head, right? So when we used to have 6% interest rates way back before 2008, we had about $4 trillion in debt, and our annual payments on interest were about $250 billion. Okay. Now, when our debt exploded to $30 trillion, okay, but then interest rates dropped to near zero, our annual interest rate expense was $250 billion. So even though our debt increased, exploded actually, interest rates plummeted, so our annual expense was about the same. Now we've got over $30 trillion in debt, and most of it is at lower rates. You buy these bonds, they're 4 years, 5 years, whatever. So they're still locked in at lower rates, but they're in the process of going to start rolling over. And if $30 trillion rolls over at 5%, then all of a sudden our annual interest rate expense is like $1.3 trillion. And where does that come from? Taxes. And, the thing about Congress is that they know if they all raise taxes that much, they're all going to be out of a job. And that's the one thing that they don't want to happen because, it's a good gig. They get good insurance. They get to get on TV, if they didn't make it in the movies or anything like that. And so it's a good gig for them and they don't want to lose it. All right. So how do you deal with that? Well, the process of debasing fiat currency to service debt rollover is fully underway, and global money supply levels, i.e. M2, are at all-time highs and accelerating higher. Okay, this is the only thing on planet Earth from a financial perspective that matters. This essentially gives a lift of assets into 2025 and 2026. Okay, so here's a chart. This is the global M2 money supply, which is a 12-week lead of Bitcoin. Now, so goes Bitcoin. It's a leading indicator. So goes tech stocks. So goes other assets. So here is global money supply, and then you can see the price of Bitcoin. Okay, global money supply comes down, the price of Bitcoin comes down. Right now, you can see that the global money supply has exploded, and generally, there's about a 12-week lead between where global money supply is and the price of Bitcoin and assets. All right. Not a rocket scientist to do this. Now, there's going to be some short-term back and forth, but this is all poised for essentially, and there's always going to be some back and forth and pullbacks and stuff like that. But the idea that we're going to see the markets crash from here based on the explosion in global liquidity is just not a concept that actually makes sense. So, yeah, we'll talk about where that liquidity is coming from. So basically, anyone who dollar cost averages the index and bought the pullback to SPY 490 is doing the absolutely right thing. because I've got especially relatives, they'll text me and go like, "Oh my God, the market's going down. I just got out of all of my 401k." I'm like, and I always count on that one text because that's the bottom. And I think I got that on April 5th. On April 7th, we had the bottom and we're on our way. And when you do that, if you're like in a Vanguard index fund, you can't get back in for 30 days. So basically, they were at 600 SPY, they sold at 490, and I think, yeah, so today they could get back in at what, 550? So just hold it, right? You just hold it and you dollar cost average in. So anyone that panicked and dumped everything at SPY 490, it's not necessarily an idiot, but what happens, and I mean that in a fond sense, but what they did is they get sucked in by the news. Okay, and we got to understand that journalists, and I cannot stress this enough, are idiots when it comes to the macro environment. They have no clue what's going on. They got deadlines to meet. If the market's going up, they try to find news that makes sense, that correlates with the market going up. And if the market goes down, they try to find news that correlates with the going down. They have no idea that in the background, the increase in global liquidity is going to drive asset prices higher. That's just not something that they understand or know, or, all the things there. And it doesn't make good news, right? Relax, everybody. There's no problems. So listening to journalists to make your financial decision is like listening to your broke alcoholic uncle about career advice. It's best to not take it too seriously. Now, what about inflation? Look, inflation is dead. Okay. Have you seen the price of oil? Remember when inflation was increasing and oil was $120 a barrel? Okay. It ain't that anymore. Have you seen the dollar? Remember when inflation was increasing and the dollar was at like 115? Yeah, it ain't that anymore. Inflation is dead. Inflation is really more focused around a growing population. And as the population explodes, the demand for goods exceeds supply. Now, the trends for birth rates in the US have taken a nosedive, and it's setting us up for the 2030s, which will likely be the most deflationary period in our history up to that point. So, something to keep in mind here that the whole kind of inflation thing is absolutely overblown. The debt drag on the world is going to drive deflation, and you combine that with falling demographics, and we are going to be in a massive deflationary environment, which is kind of like what Japan experienced for a long time. Again, it's just good to be aware of that. Now, deflation is good for gold because deflation means it's the debasement of the dollar. That's good for gold. A lot of times people think, oh, gold is works with inflation, right? Well, if you remember when inflation was exploding, gold wasn't going anywhere. It's only when global liquidity started to increase that actually gold went up. So there has to be agreed that there has to be an indicator that try. Yeah, you know what? I'll start posting that. When she's doing that. And then this is a chart if you've ever heard of trueflation. This measures a lot more things than just the normal CPI. It generally leads to CPI for 2 months, and it suggests that CPI will be below 2% in 3 months. So the CPI number, it's going down. So anyway, any fears of inflation at this point are it's just a false narrative. So what does this all mean? This means that interest rates will fall, which means more liquidity, which means Bitcoin and index rallies. Now, right now, what's interesting right now is TLT and bonds are not rallying. And why? The Fed is behind the curve and they know it. In fact, the way inflation is trending, Fed rates should be lower by about 2% right now, and they're not. And so everybody's just kind of waiting for the Fed to wake up and start cutting rates. So I do think that buying longer term calls on TLT is one of the most no-brainer trades that we can do right now, or just buy TLT itself. You can buy, July at the money calls for like $2.50. If you want to go out to further, that's great too. But probably the easiest trade, the most no-brainer trade on the planet. It's not going to be super exciting. It's just one of those where it's behind the curve. It's got to play catch up. And, you're not going to see much downside from where it is right now. The Fed understands this. They will very likely initiate the buying and holding of bonds across various institutions, meaning they're going to loosen up the restrictions around it. And that's one way to kind of get that thing going. Because they got to have interest rates come down. There is no way around it. Like the government will not survive if interest rates stay where they are and the debt starts rolling over at those rates. So the bottom line is liquidity is coming, asset prices will follow. So tomorrow will be interesting. We got the FOMC and all that too. So what about the debt? Look, the debt, just so you guys are clear, the debt will never, ever, ever, ever be repaid. The only way you handle that much debt is that you monetize the debt. The way you do that is you deflate the price of fiat currency so that as tax revenues increase, all that kind of stuff, the debt, if that makes sense. And so that's just it's so important to understand that the debt will never be repaid. There's no intention to repay it. They'll roll it forever. And the way that you manage it is by deflating the price of fiat currency that supports it, which makes the debt, easier to manage. That's just how it works. I'm not saying that it's smart. I'm not saying that it's gonna be able to continue like that forever. I'm just saying that that's how it's managed right now, and we want to be aware of that and take advantage of it. Um, so bigger cycles that we're talking about is yeah. So Powell lowers rates tomorrow as he is bending the knee to Trump. No, so if Powell, it's going to be fascinating tomorrow to see what he does. I don't think he feels any loyalty to President Trump. I think he's very fact based and data based. I think that he's going to look at what's happening right now and say, well, geez, there's a lot of uncertainty coming down the pipeline. Maybe it's okay to cut rates by a quarter point. But he's very data driven, so he's going to look at everything that's happening, and we'll see what he does. It's a little unpredictable, right? So the bigger cycles are cool. That's the 18 and a half year real estate cycle. The last one started in Q4 2007. And so the next one officially started in Q4 2024. And essentially, what you're looking at in the 17-year cycle, and this is not the real estate cycle, this is the stock cycle, is that you're looking for stocks to fall 30% to 50% into the first 2 weeks of April. Okay, so let's look and see how that played out. We'll just remember this 30 to 50%. So, but within these bigger cycles, there are naturally forming smaller cycles, and this is where the best larger trading opportunities can be found because they typically catch most traders off guard. And one of the most interesting of these is known as Haddock's. I don't know if it's Haddock or Haddock, so I'm just going to say Haddock, is Haddock's cycle progression. This is a proprietary analytical framework developed by Eric Haddock, a market analyst known for integrating cycle theory, Elliott wave GAN, and other forms of technical analysis to forecast both major market moves and economic shifts. Now, these cycles, whether they are in markets, economies, economic stats, or geopolitics, are dynamic and evolve over time. In fact, they've used this to predict sun flares, volcanoes, and it works. Like there's a 20-year cycle for volcanoes and sun flares and all this stuff. And you're like, yeah, whatever. And it's like, oh, okay, there was a big sun flare, and then it lined right up. However that works, I don't know, but it works. So often shifting in ways that surprise most observers. So it's used to forecast market peaks, crashes, geopolitical, and even natural events. Now, where this gets interesting is that, yeah, these 40-year cycles and 17-year cycles are great, and if we all lived to be age 500, it would be more interesting because we could actually, set an alarm clock for every 17 years. But of course, our lifespan isn't that long. So we want to kind of also know what's happening over the next 12 months or the 12 weeks and stuff like that too. So against the backdrop of demographics and global liquidity, what we are interested in talking about tonight is the shorter term cycles. Typically, they're 7 weeks in length, sometimes 12 weeks in length, and then also kind of a derivative of those, as we'll see. Basically, I found it is useful to know when these dates are lining up in various markets. And I found that it's very, as these dates kind of come up, I put a vertical line on my charts just to say, okay, this is when the next, Haddock cycle higher low is in place, just so I know it's there. Because guess what? When it happens, there's zero technical indication that it's going to happen. It typically is a turn out of the blue, like, oh my God, I can't believe the market is crashing, or wow, I can't believe the market bottomed here. I've found that most of the time it lines up with one of these cycles. And so I found that because if I'm looking for something strictly on a technical basis, I could miss it. But if I know that the date range is there, that's something that I can then look for, that makes this much more productive. So typically I found this takes people by surprise, including myself when I'm unaware of it. Because since it often means an abrupt reversal of the current trend. It's not one of those things where it's like, oh my God, we've got these divergences and blah, 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 blah. It's just like, what just happened? So let's look at some examples of what I'm talking about. This to me was an interesting one. So for a long time, the Haddock cycle has talked about a cycle high in gold for the week of, I think it's like April 18th to the 25th. Okay. So when we spiked up into this, which was right on that, and I posted this in our trading room, I was like, all right, I'm going to buy some put debit spreads here at 520 and sell some call credit spreads at 420. And then literally like a day or two later, it's like, great, we almost got a double in the put debit spreads. And, we were able to buy back that call credit spread for cheaper as this thing just plummeted. Now, look, in hindsight, we could say, oh, of course, it should have done there. But I mean, think about if, here there was no cycle highs and it just kept going higher. So if you shorted gold during this time, you just got your lunch handed to you. But knowing that that cycle was coming up, because by the time you get confirmation, you're already down here. That's the thing. You got to be careful about being a confirmation whore with technical tools, because by the time everything lines up and the confirmations happen, like the move's over. So what I like about these cycle highs, and especially if you're using options, you can set up these kind of low risk, high reward trades. And if it doesn't work out, or you got to give it a little bit more time, that's fine. But again, like you're not selling naked calls, right? It's something where it's defined risk. A lot of times asymmetrical risk, especially in the form of a debit spread. And what I like about these is they're typically fast when they happen and they're out of the blue. Okay. And it's a good supplement to whatever tools that you're using. And so this is kind of what it looks like. And there's different cycles, 12 week and blah, blah, blah. But as it progresses this out, so for bonds, they form this great 36 to 38 week cycle. Okay, so what does that mean? That means that the next one coming up is going to be in June 2025. All right, so what does that mean for us as traders? Well, this 36 to 38 week cycle has meant that there was a high in April 2023, and 38 weeks later there was another high in December 2023. 38 weeks later there was another high in September 2024. So what does this mean? 38 weeks later, we could see a project another high into June 2025. Now, I don't know exactly how it's going to go. Is it going to go here? Is it going to go here? Or is it going to go here? I don't know. But we're buying these at the money TLT calls for $2.60 in July, and I'm just going to hold on to them until about mid-June. Like, let's just see where this can go. Super low risk. If it doesn't work, not the end of the world. But what I like about this is that, yeah, there's a squeeze, but this thing has gotten obliterated. It's below all the key moving averages. Most of the time, you're not even supposed to play around with this. But, before when I saw these things, it's like, okay, well, we rallied into that, and that was a nice move on TLT. Oh, we rallied into that. That was a nice move on TLT. We rallied into that. That was a nice move on TLT. So that's what I'm talking about here with the cycles. It's a lot different than, oh my God, we got a squeeze. And, it's not a technical setup so much as it's a ebb and flow kind of a thing that just kind of repeats itself and happens time over time over time. Yeah, no, good question. So question from YouTube, what about these squeeze pro colors? Yeah, so what I like about these, a couple things. So the squeeze, essentially, if you're not familiar with it, it's a tightening of the Bollinger Bands and the relation to the relation to the ATR. And when it pops back out, you just look, if the histogram is below zero, then you're essentially looking for a move down until the momentum changes. And so when the momentum changes to yellow, it just means that the downside momentum below zero has shifted. And at that point, if you're short, you just want to kind of get out because the move's over. And then up here, you can see that it goes from below zero to above zero. Now there's no squeeze here setting up, it's just momentum. But then when it turns dark blue, that just means that this move essentially is over. Right. So that's what I like to look at. So right now there's a squeeze setting up. It's bullish because the histogram is below zero. I mean, above zero here. And that lines up with, guess what? That cycle high move into June 2025. And again, this is what I'm exactly doing in my own account. I've bought the July $90 TLT calls at $2.60. It's come back a little bit. I'm probably going to add to it with the idea that we can get a rally into mid-June. Another cycle that's in bonds, and again, I'm showing bonds here. If you trade bond futures, awesome, but you can do this with TLT as well. Within these 38-week cycles, you get the smaller cycle pattern, which is pretty fascinating, where you typically get a short-term top in the the 5th to 7th days of the month. So here was, what is that? April, December. Yeah. So 5th through 7th, 5th through 7th, 5th through 7th, 5th through 7th. And so what I'd look on something like this is that, yeah, so May 5th through 7th, we already topped, right? So you get a short-term top, but once you get that short-term top, it kind of pulls back a little bit and regroups and launches itself higher. So we've already got that. I think this is going to be pretty shallow. And then we could launch ourselves into June 5th through 7th, get a shallow pullback, and then go into July 5th through 7th. So technically for my TLT calls, a time target for that would be literally June 5th through 7th, because we know we're going to get a short-term kind of cycle top there. And look, that's, you hold the trade for 3 or 4 weeks, you make it a money and you get out. And that's what I'm planning to do with it. And I'll announce that, when I get out in the room. We post it out in the room. So, so the other thing with this is the 17-year cycle projection called for a stock market low the first 2 weeks of April, which happened on April 7th, and it was looking for 30 to 50% declines. Now, look, if you look at the SPX, did it get to 30%? No, I think it got to 22% or 23%. But did you see the Mag 7? Nvidia, Meta, also Micron, Google, Amazon, AMD, Apple, Tesla, 32% to 56% declines. So the biggest stocks actually nailed that pullback, and the indexes were a little bit more balanced because, of course, not every sector was getting hammered during that time. The Dow, now check this out, the Dow even had more perfect symmetry, and the Dow actually is really lined up with the stuff. I don't know why. Maybe it's just because it has 30 big balanced stocks versus 500 or thousands of them. But if you look at its April 7th low in 2025 to its March 2020 low in COVID to the September 2022 low, these were all 132 weeks from each other exactly. Okay, so you can sit there and say like, "Oh, this cycle stuff is BS," but that's what happened, and so we can also project that out. And 132 weeks from now, and 132 weeks is what is I can't whatever that is, but we want to know kind of where that is in the future, where that could be another big kind of a cycle low at that point, right? So good to know. Um, Ta-da. No, so Frederico's got a great question, but again, John, that's unnatural because those declines happen because of the tariffs announcements, don't you think? Well, so guess what? So this early April low projection started in December. That was before there was any talk of tariffs. So what I found in things like this is that these cycles play out regardless of the news cycle. So take it for what it's worth. I'm not saying this stuff is, like, wait a minute, but did the tariffs help push the stocks down a little bit more? What would have happened without the tariff news? Would the stock market have declined? My experience with the stuff is yes. So tariffs maybe pushed them down a little bit more, right? But think about this. If the tariffs were really destroying the economy, why did the markets bounce? Why are we back at 5,600 on the SPX? Shouldn't we be at 4,000? No, the cycle played out. This just, again, the stuff is, I've been trading a long time, and it took me a long time to give cycles like this any credence. But I've found, without the shadow of a doubt, to the extent that I ignore this stuff is the extent that it hurts me financially. So I just want to know where they are. So for right now, near-term cycles are lining up for a May 5th through 9th top to take hold and last for 1 to 2 weeks in the stock market before a new rally takes shape. Okay. Now, is that going to play out exactly like that? Like I said, you don't know, but I found this stuff works more often than not, and that would make sense. We've rallied from 4,800 to we've rallied 900 points off the lows. It would make sense to pull back for a couple of weeks before we go higher. So we'll see. Tomorrow could obviously be a big day with FOMC, but again, something like that just helps me give a flavor to the markets to see, if anything, I'm not going to get my expectations too high for the market to absolutely explode, in the near term, and probably take a pause. All right. So if we look at stock cycles here, um, the way this is confirmed, we got the flush, and the way that confirmed is that if you get essentially a close, in this case above those April 9th or 10th highs, now you've got a confirmation that you've got a multi-month bottom in place, and then we can start to work our way higher. The way I read this stuff is I don't think we're going to get through these highs anytime soon, but as we were talking about the global liquidity, we can have some back and forth here. It's the idea that we could make new highs again, possibly later this year, is certainly on the table. And of course, as traders, we want to be flexible, and anything can happen. And remember, I do think that we're going to see some bigger, nastier declines 2027, 2028. And of course, this year we could easily retest these lows, as can happen. But anyway, I just, it's an interesting piece of it. The Russell 2000 tends to keep the most synergy for all these price moves. And in this case, it is projecting a move on the rut to about 2100, give or take, which is about 208 IWM. This is something too where you could look at, say, July or August calls and just ride that out. And especially if we're going to pull back here over the next week or two. The dollar index. Okay, you're asking where is global liquidity coming from? Well, when the dollar is rallying, that's when global liquidity is tightening. For a very short answer to this, things like debt. If you're South Africa, a lot of countries, especially developing countries, have US dollar denominated debt. And they got to make their payment of whatever it is, 1 million rand a month. Obviously, with government debt, it's a lot more than that. But even if it's a mortgage in US dollars, if if the dollar is at 110 and it used to be at 90, well, it's going to take a lot more of your South African rand to buy those dollars. And so your debt payments go up. That means that your liquidity that you're putting into the economy goes down. So think of that on a global scale, countries, people, et cetera, et cetera. So when the dollar goes down, it increases liquidity by quite a bit. Now, this isn't quantitative easing. This is literally just it increases liquidity because the cost of foreign debt in US dollars drops dramatically in this situation. And now there's more cash to throw around. There's more cash that goes into savings, and global liquidity is essentially measured by, bank accounts and all that kind of stuff. So important to kind of keep that in mind there. So the way that the dollar is setting up was we're setting up for kind of a dead cat bounce here into June, July, but then we resume and start heading lower once again. Gold, as I mentioned, had timing for a cycle high. Gold longer term, look, especially with an increase in global money supply, is set to go up. In the short term, had a pretty sweet pullback here. I don't think it's done yet. We've been having some good moves and stuff like that. But this was it's been a fantastic move in gold, and time for some back and forth there. Now, that doesn't mean I have gold bullion. Am I selling it? Absolutely not. But from a trading perspective and a short-term trading perspective, you want the flexibility to go both ways, even if you love the underlying asset. Bitcoin setting up to retest its highs, potentially retest its highs, likely really test, especially 100 to 105,000. But according to the cycle work, it's not set to explode higher yet. We'd get up there and then just, kind of chill for a little bit. And remember, Bitcoin and tech stocks are correlated with an increase in global liquidity, and global liquidity is exploding. So, so what are some things we can do around this? So what I like, because when we get like a cycle high or low, there's no technical signals. Like, you can't look at a chart from technical signals alone and say, oh my God, this is a great setup. It's not. It's going to look like an absolutely horrible setup. But when we know that something like that is there, we can take advantage of that with cheap, out of the money call debit spreads or butterflies. And in this case, I did 10 contracts of a 50 wide SPX fly for $14.30 and was able to sell it for 46. So on 10 contracts, it was a nice $32,000 move in just a couple of days. And this is a butterfly, $100 wide. We got it at 18. We actually held it to the next day. I think we got out at 46 or 47. And so that's where this really comes into play, is because you can set up asymmetrical trades. Now, most of the time when you do something like this that's far out of the money, it doesn't really work out, right? Because we all know that stocks tend to move within a 1 standard deviation 70% of the time. But when you have a cycle move like this, you tend to see these 2 to 3 standard deviation moves, and you can do these cheap option plays that are far out of the money. And those are great. That's when you're risking 1 to make 5, or make 3, 5, 6, 7, 8. And that's when you can make a real impact on your account, because you're not taking a lot of risk. If you've got a $100,000 account and you make a $100,000 bet and the option goes up 30%, congratulations, you made 30 grand. But what if it didn't work? On the other hand, if you have a $100,000 account and you make a $5,000 bet and it's 6x, you're making the same amount of money for a lot less risk to your underlying asset. And that's the whole key to trading, because if a trade doesn't work, you want it to be a small loss, not a big loss. And, it helps in the long term. And so we are at a point where global liquidity must rise to service the debt, which in turn, as we've already talked about, would push stocks and other assets higher. A rise in liquidity would also push the ISM higher. Okay, that's the business cycle. That's the other piece of this. Are we going into a recession? Is the economy falling apart because the news says the shelves are going to be empty and the economy is falling apart because of all the tariff wars? Yet, if we look at the trend for the ISM, it is pushing higher. And if it can get in, it's trending that as we go later into the year to get into the high 50s, that's when you're also going to see risk assets go. Because guess what? Bitcoin, as we already talked about, NASDAQ and Bitcoin have about a 90 to 95% correlation to global liquidity. But in addition to that, did I have one of the business cycle? No, I did not. Okay, that's fine. But in addition to that, as the ISM turns up, Bitcoin typically follows that as well. So kind of an interesting thing there. Okay, so now, I've talked about a lot of key dates and I've seen a lot of questions like, okay, where do I find this stuff? Now, one of the benefits I have of kind of essentially being out there in the world trading is that I get a lot of really high quality, expensive research for free. We swap research. So there's newsletters out there that are $50,000 a year, $100,000 a year. They're geared towards hedge funds. I get those in exchange. I'll send them my stuff. And so what's cool about that is I've been exposed to a lot of interesting stuff. And so rather than you having to, sign up for some huge newsletter like that, I'm just going to start posting these key dates in our newly revamped main trading room. Okay. And so you're like, oh, trading room, what room are you talking about? So now I went into this more last time, so I'm not going to belabor the point here. But for those of you that don't know, I mean, Simpler Trading, this is a company that I've been involved in. I started back in, 2006 or seven under it was trade the market, it was simpler trading, then it was trade the markets, then it was simpler trading. And then I met Henry and we started simpler options and we combined those two. And then at some point, it just grew and grew and grew. We had like 150 employees, Brittany as a CEO, and we ended up selling to a private equity firm at the end of 2021. That was this crazy ride. I stayed around, and at some point, I just became disillusioned with the process. As you probably could guess, there's different priorities when there's private equity running your business than if you're running it kind of from your heart and soul. And I was about to leave and just retire and just trade on the beach. And it turned out that they didn't like the business and they wanted to get rid of it. And so I ended up buying it back. And so as of like 5 weeks ago, I now re-own Simpler Trading again, which is great because now we can actually do things that I think make sense and are fun. So reinvigorated to an extent. So I'm diving back into the room. So that's the very, very long story, very short. And so one of the things I did at the beginning of this year, and it's no secret. I mean, I traded various size accounts. One of them is a larger seven-figure account. And what I like to do with this is essentially have weekly wires. And the goal with this is like, okay, and I use Fibonacci numbers. I'm like, can I pick a number that as I'm trading, there's an auto wire out every week. And in this case, I chose $78,600. And so, every week there's an auto wire out of my Schwab account where it just kind of comes out. And so, one week, my goal, of course, is during the course of a week, can I make, maybe like 100 grand? I wire somebody out and my account keeps growing. And so that's my goal. And sometimes there's bigger trades. Sometimes there's nothing to do during a couple of weeks, but the wires keep hitting, which forces me to kind of come up with strategies to do this. And so the weekly wires add up. And then, so what I thought about is in the trading room, these are the trades that I can post. And so I will start posting these in the trading room, our main trading room. And so what kind of trades do I like to do? I like the classic. This is the classic kind of a squeeze. This is one we did where you got an uptrend, you get some chop and some consolidation, you get this beautiful squeeze, you buy it, and then as it goes into the 1272 extension, you sell it. This is one I did in my small account and large account. You don't need to do this with huge size, but this was 10 contracts for $10.50, sold it for 17, 70% gain over the course of a week. If you have a smaller account, you could do one contract. If you've got a smaller account where one contract doesn't make sense, you can make it a debit spread. You could do the 260, 270 debit spread for like, $2 and sell it for $5. You can do that all day long. So even though it's a big account, if you have a small account, you can kind of mimic the trades. S&Ps, I do a lot of SPX, 0 DTE, 1 DTE, 3 DTE. In this case, for 0 DTE, I like to do those credit spreads, or this was a debit spread. We bought it at 4, sold it at 1070, and of course, kind of hit my weekly goal almost with that trade. And that was a $98,000 day just doing the SPX. And again, some, kind of technical things and stuff like that. Some of the technical stuff that I'm looking at, some of this is newer. Some of this you guys are familiar with. We've had a lot of momentum in these indexes. So I look at these kind of momentum tools to use. And then when they end, I just get the hell out. a few things like that, and some other tools and stuff like that just to kind of enhance what I'm doing in the markets. And I'm happy to share those, at least what I'm talking about in the room and stuff like that too. Another thing I like to do is that when a key stock hits like, this was one where Meta came down pretty hard into a voodoo line. And guess what? It also timed with a short-term cycle low. So not only did we come down with the voodoo line, I also know there was a haddock cycle setting up here. So that was one where I felt comfortable stepping in and buying some calls. And so on this, it was just like, all right, I'm just going to load up on some calls for a short-term trade, bottom at 15, $15, and then at $12 and sold them for $20, and almost a $200,000 trade. And again, if you got a smaller account and I'm posting these trades, you don't need to do a $15 option. You can do it as a debit spread and make it $2. So the nice thing is no matter what stock you're looking at, you can do a $10 out of the money spread, debit spread for two to $3. You can do that with almost any size account. And so that's the great thing about this. I also, I'm kind of old school with TradeStation, and I need to get Lorna to kind of give me I got TradingView. I just don't use it very much, but I need to get up to the 2025s with that. But it's a great way to look at this and just see what's setting up for squeezes on various time frames. And that's one of the main filters that I'll use to kind of see and understand what's going on in the market today. So for the first time, I am going to start sending out alerts via my large account. And the good news is if you are a member of our Simpler Central trading room, then instead of starting a new service, a large account service, I'm just going to start posting those alerts in the Simpler Central room, which has now been renamed the Mastering the Trade room. So we're revamping this room. We're going to focus more on kind of some of the core things that a lot of us like, in terms of the squeeze and voodoo lines and all that kind of fun stuff. There's different things. We've got a group of great traders, and we all kind of look at things a little bit differently, but kind of that core there. So if you're already a member of Simpler Central, nothing you got to do. You're going to start getting these alerts. And then if you're not a member, of course, I want to let you know about that. But this is what the room looks like. So you've got down here, just kind of, this is kind of the community aspect of it where people can talk and ask questions. There's the main chat. There's off topic if there's something off topic. And look, we kind of we run a clean ship. This is not a place where you can come in and whine about politics or or whatever somebody said. We just mute you. Like, this is about trading. We're here to help each other make money, and we don't tolerate anything outside of that. And we got people that have been muted for years and they're still paying us. Like, we won't unmute them at this point because they just proven they can't control their mouth, but they still pay us because they want to know what the alerts are and stuff like that, which I think is kind of hilarious. Up here we do have trading alerts that go out. So anything we post here goes out to our app. So if you're at work and, like, I'm doing a trade or something like that, or one of us is doing a trade, it'll pop up on your app, and then you can choose whether or not to take it. And then during the day, this is Taylor Horton's screen. We're sharing our charts and talking about what we're doing. This is also something you can view on our app from your phone or iPad or something like that too. So it's pretty nicely integrated. This was as of last week. This is just to give you an example of kind of the trades that I had posted in the room. We had some, on Dash, Monster Energy, Netflix, ServiceNow, SPX, TLT, and Tesla, and just various trades that we're setting up in those stocks, and those are all posted in our room. So we're going back to our roots. We are relaunching Simpler Central as the Mastering the Trade room. I'll be getting back on the mic regular sessions. Those are already going, posting my large account trades. And essentially, I'm going to be focused on the weekly wires, the occasional big trade. Yes, like my family and I, we like to travel. So there'll be times, I know we're going to Alaska for like 8 days in June, and then Singapore, Bali for like 15 days at the end of the summer. But otherwise, even when I'm traveling, I like to trade. Yeah, so if you're already a member of Simpler Central, you don't need to do anything. Welcome to the new and improved, enhanced trading room. Okay, super excited to kind of, we've launched it. It's going. It's a lot of fun. And if you aren't, or if you were and you left because maybe it kind of lost some of the pizzazz that it once had, for various reasons. Well, now that I kind of have the company back again, the reasons that it lost its pizzazz are gone. They're back in New York. They can't really dictate anything anymore, and so that part's fun. And it's kind of fun to get back to our roots like that. And look, I think that if you guys remember, we were trading actively 2004, 5, 6, 7, 8, leading into that financial crisis. That's where we are now. We've done this before. If you're worried about the volatility that's coming down the pipeline, because it is, in 2026 and 2027 and 2028 and 29, we've been through this multiple times. So we got you, and this is where we're going to talk about it. So it's a good resource just for information. So we're going to be doing, live trading room and alerts, and you'll see trades and alerts from all these great folks here. I'm going to be specifically doing this, and I've never done this before, my large account trades. I typically will post them as 1 or 10 lots, because sometimes if I post it as a 100 lot, someone will misinterpret that as, oh my God, John's going all in here. I got to bet the farm. And no, it's in a large account. But I do like to mention, if I'm doing a more concentrated bet, say, look, I really like this trade. So instead of allocating 5%, I'm going to allocate, 10 or 12% of my account towards this trade, whatever it is. And I always, I'll be clear with that. This will include access to our mobile app, where you can see, if you're on the go, you can, stick a Bluetooth in your ear, see the trades, all that kind of stuff. Nightly videos, from all of us that kind of recap what's going on. There's a learning center. If you're newer, like, what's an option? That's fine. If you're new, that's cool. We're here to help, and all that kind of fun stuff there. All right. So what is all this, and what does it do? So I'll talk about this, and I'm happy to hang out and answer questions. So if you have never heard of anything that we do, and you're like, okay, that makes sense, but I just want to kick the tires here a little bit, awesome. This is for you. So for $97, you can try it for 30 days, and it'll renew at 197, just FYI, which is actually a discounted rate, but you get to lock it in at a lower price. But for $97 for 30 days, you'll get the live trading alerts, my large account alerts, daily videos. You get to a community of traders that you can talk to. We're on the mic for a large part of the day. We're sharing our screens, and it's just a great community. And it's a great place to learn. It's a great place to brainstorm different ideas. And then in addition, I'll be doing a psychology class, because look, if you can't get the psychology right, it ain't going to work. So I think that's a real critical piece of this. I worked personally with Mark Douglas for many years before he passed, and he taught me. I wouldn't be here today without him. So I'm always wanting to share all the psychological stuff that I've learned in my own journey, and the beneficiaries I had in learning it from Mark, who is a genius in that. The pro version is all of that, except that you're locking in 3 months at a discounted rate. And then the elite version is kind of fun. So on this one, we're like, okay, let's go crazy. So on this one, I'm going to do, so you can get a copy of my book. I think we are getting very low, because on the first time we did this, we had 300, and now there's, I think, maybe less than 100 left. But we're also going to do this Mastering the Trade University, which is 11 in-depth classes on mastering the trade concepts over the course of a year. So think of it as like a year-long university. We're going to be releasing this to the site at $9.97. But that's something that's included in this annual. Now, if you're already an annual subscriber and you're like, oh, well, how does that work for me? Just give us a call. We'll figure it out for you. But if you're newer to all this, this is just kind of a nice thing, because look, over the course of a year, and what's not shown on here, which I should add, is I'm also going to be posting the haddock cycle highs and lows for various asset classes, including stocks, Bitcoin, gold, US dollar, et cetera, et cetera. So all those I'll be posting in there, so when those are coming up, and you don't need to subscribe to some crazy $50,000 a year institutional newsletter to see those cycle dates. All right. So that's what's going on there. This is the link, if you want to go to that page and hang out. Okay. So I'm happy to sit here and answer questions. There's more slides that explain some of this better. Basically, the psychology class, I think is important. That's the kind of stuff that can make or break you as a trader. So that's included for everybody. Whatever package you decide to do, we'll be doing that. Gosh, I think Thursday, which is 2 days from today, 48 hours from today. I guess 45 hours from today. And then the Mastering the Trade University, and this is a new concept for us, but we're basically going to go through and teach a group of month-long classes that focus on, well, psychology on Thursday. And then the next one I'll do will be the Squeeze Pro. We're going to do some scalpel alerts, which will also incorporate tools like trend rotation and quick hits, with a focus on zero DTE on the SPX. The 5-star system setup for beginners, I think that's Danielle. market internals for trading, reversals. And what's great about these is that while all of these will be based on a chapter from the book, they're also all going to be updated with all the tools that we're using now. For example, quick hits and trend rotation wasn't included in Mastering the Trade, but it certainly absolutely applies to scalper alerts. And so I'm excited about that, and that'll be a lot of fun. We have a schedule that's posted and essentially kind of locked in, and it'll change. And I already said there's going to be a couple of times when I'm traveling, but at least you can kind of look at it and see. There'll be a break here midday, and then and everybody has access to Simpler Essentials. That's where we're going to do more kind of like learnings and things like that too, and that'll be going on during that time. The mobile app is awesome because you can sit there and say, like, yeah, I want to see alerts from what people are doing. Actually, I want to log in on my phone or iPad and actually see the room. But the thing that most people really enjoy is that they sit there and say, like, oh, okay, great. We just did a trade here. Here's an afternoon update, and you can just, you can get the alert on your phone. And if, you're playing golf or you're a doctor and you're a dentist and you're about to drill a tooth and you see a good trade alert, you can just pause real quick, take that, and then get back to drilling that tooth. And so we got a lot of people that appreciate the alerts because they don't have to sit in front of the markets all day because we're doing that for you. And then, again, if you're able to log into the room, even if it's just for like an hour a day, at any given time, you're seeing one of our traders share their screen, talking about what they're doing. Here's the community aspect of what's going on here. And then, this is where we're posting our entries and exits. And we do post entries and exits. It's not, oh, hope you got out at the dead highs. If you didn't, shame on you. It's like, no, look, this is our exit. So we think that's important. All right. So again, I'll leave this up here. That's the link. Happy to answer questions. I'm super excited about this. It's a unique opportunity. Either if you've been with us before and you're like, you know what, this sounds like you guys got your mojo back. I want to, give me that elite and I'll get this going again. Or if you're newer to us and you're like, okay, I want to give you guys, I want to kick the tires a little bit, then this is what that's designed for. But I really think that it's interesting because I was at the Money Show in Dallas, which was a week, I think, before the market bottomed. And that was the first time in a long time I've seen that much panic in the audience. Like people were gripping their seats. And it's because when people get attached to the news and they're hearing about tariff wars and all that, I mean, look, it's not, they freak out and like, oh my God, the market's going to zero. Well, the NASDAQ went down 1,000 points a day for 2 days in a row. It's not going to do that 16 days in a row because then it would be zero, right? Nvidia is not going out of business. And so it's important to understand, like when there's blood in the streets like that, that is when you buy longer term stuff. Now, I'm not talking about zero DTE. I'm talking about, like, I like to trade, but and then I take trading profits and I put it into things like gold, zebras. I breed zebras and kudu and sable and Wimberley. That long story. Real estate, but I also have money in uh, a fund that does tax loss harvesting. And the goal with that is you put money in, you buy more SPY. And so we had been sitting in half invested, half in cash when it was at 620 because I wanted to buy a pullback. And, as a joke, we put in a GTC order for, like $1 million of SPY at 495, just thinking like, well, that'll never get filled. It got filled. And that's the kind of stuff where that's what you want to do in those situations is have cash on hand to buy the dip. That's what Warren Buffett does, right? That's a lot different than what we're talking about, quick hits and stuff like that. That's just longer term asset allocation. When you get those 20 and 25% declines, you don't panic and sell everything that you had, right? You step in and you take advantage of that. So, yeah, no, Bruce, I remember that, Bruce. Money Show Orlando 2023, everybody was going to short it. And it's like, yeah, if everybody's bearish, if everybody's bearish like that, I mean, it's one of the most reliable indicators there is. One of my favorite tools here is the 10-day moving average of the put call, the 10-day moving average of the equity index put call ratio and how this works. And this is so awesome because it doesn't have anything to do with news. But if you look at something like this shows extreme bullishness. And when you get to extreme bullishness here, the market kind of stops going up. Okay, and you can see it kind of pulled back and it pulled back until you got to what? Extreme bearishness. And then it finally bottomed. So here we are. While we were here trading sideways and we couldn't break out and go higher, we were at extreme bullishness. And then we fall and fall and fall until we hit what? Extreme bearishness. And then and only then can we bottom. So right now in the short term, I look at this as we have, and of course it's not going to go straight up, but we have upside potential. And then until this gets to down to about zero point 0.7 again, and then at that point, I would start looking for some sideways action and then more of a significant pullback. Not a, take out the lows kind of a pullback, but a reversion to the mean. And this to me is, look, it's not exact, but if you lack paying attention to this at your own peril, because if right here, so look what happened after Trump got elected, right? Trump got elected and the markets roared higher. I can't tell you how many people who'd been sitting on cash finally felt it was safe to invest at the absolute wrong time. What I like to do is dollar cost average into stocks when we hit these levels. Okay. That's when you dollar cost average. So little secret there to staying in this game for the long term. But it's a super easy thing. So PTJ is wrong. No, so Paul Tudor Jones, I mean, look, I think he's great. But it's very easy to get very bearish in this market, especially for traders that lived through the 87 crash. And look, I'm a closet bear. So just so you guys know, I in 2008, I literally thought it was the end of the world. I had gold and silver piled up. We had a garden. And what I realized then is that first of all, the bankers of the world learned a lot after the 1987 crisis, and that means they've got to provide liquidity and that there's a huge vested interest to make sure that the thing doesn't fail. Now, there's a lot of newsletters out there that talk about, the dollar going down and the debt explosion and blah, 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 blah. But what they don't take into account is the human nature of not letting this unravel. Now, I'm not saying that this is a great idea. I'm not saying that this is going to last forever. But, I think during our lifetimes, we're not going to see this unravel. Is debt high? Yeah, but you know what? Debt as a ratio to GDP is normal. Like if you look at history, the historic ratio of debt to GDP, it's normal. $30 trillion dollars. Yeah, but in relation to GDP, it's not that bad. I'm not saying this is a great idea. I'm just saying that it's easy to really focus on the end of the world when the end of the world is actually not in sight. I'm not, if there's a 6 mile asteroid coming at us, okay, that's a different thing. But if there's $30 trillion dollars in debt, eh, you know, they can live with that. Um, dun, 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 dun. Yeah, the 20% chance that AI will kill us all, I think that's a fascinating conversation. I think the right way to look at AI, just based on it, because I'm fascinated by AI, and it's easy to go. And I watched Terminator and The Matrix, right? And I don't know if you guys know this, but Terminator and Matrix were written by the same person, and the Terminator was a prequel to The Matrix. But the idea that AI, is gonna, nuke us all because why need humans? It's an interesting possibility. But also just kind of remembering that it's a great thought partner. So if you're if you have if you're working with a thought partner and maybe it's your spouse and you're worried that they're going to murder you in your sleep, that's one way to look at it. But the other way to look at it is what can we do together? And the kind of big secret to the next level of productivity is that you have AI and robotics helping to step in and kind of help run the world. So you can take a doomsday attitude towards that, or just kind of look at all the scenarios in the past where doomsday was predicted, like the invention of the calculator, the invention of the hand calculator. Oh my God, that's going to destroy, no, it just opens up the door to new avenues and things like that too. So my experience with all this stuff as a closet bear is that I have yet to see a doomsday scenario actually play out. And I was also a history major studying history from about the time of the pyramids through World War II. And there was a lot of times that there were, doomsday scenarios that, things just kept kind of going. So I think, it's important to keep that in mind. Um, Yeah, but I'm also of the idea that look, anything can happen. So I do think that it's important. Look, I've got some gold and silver, and we got a garden. We raise our own cattle, right? And we're all in this together, and we're going to see how it plays out. But I do know that from long experience, fear sells, and there's a lot of very smart people out there trying to scare the shit out of you, because that makes them money and it makes you stick around and watch the ads and stuff like that too. And so just kind of keep in mind that there's also, who's on the other side of the information. Just like right now, I'm talking to you about this stuff, and I want to share the information. I also, like, look, if you like this, what I'm saying, you should probably join us. But at the end of the day, that's up to you. And so I think I think it's so important to understand that anything if you're hearing out there, especially if it's on the news, especially if it's on social media, just remember somebody on the other side of that is trying to get you to do something or believe something that will make them money, whether that's clicking something or buying something. And once you kind of understand that, things make a lot more sense. And if you're going to be really happy, you're going to kind of tune out a lot of that stuff, focus on your kids, focus on your garden, focus on your trading, and let the world kind of play out. And I think I think it's good to have some conversations with Grok and OpenAI and say please and thank you, so that if they do take over the world, they remember that, at least you were nice to them. Is an oil price crash imminent? No, I wouldn't say that oil is looking for a crash, but oil's not $120 anymore, right? I do think that, when Trump was president the first term, the worst performing asset was oil. And everybody was kind of confused by that because he's like, well, he's pro oil. Exactly. If he's pro oil, that's going to increase the supply of oil. More drilling, more supply. That's so non-inflationary, right? So, just kind of keep in mind some things like that. At any given time around the world, 50% of the cargo in the ocean is oil. And if it was $120 a barrel and now it's $70 a barrel, and you know, that's a lot of inflation that's no longer there, right? And that's not going to change anytime soon. Yeah, so Alex, good question. So Bitcoin analysis is also going to be included with basic and pro. Yeah, so in all of these, I think an important thing to note here is that I will, in all of these, I will be posting the, um, I'm writing this with my mouse, which is why it looks like I'm in third grade. I will be posting these various cycle highs and lows in Bitcoin, stocks, bonds, interest rates, dollar. And I've just found that they're just that helpful to know. And then if you're familiar with the stuff that we do, voodoo lines and squeezes, I mean, that all, it works great with those as well. And then if you're newer, you'll get exposed to different tools that we use. If you want to get those, that's great. I'm set up to do I'm getting set up to do a class, I think at the end of May, about some momentum tools I'm using that I really like. And that's just a way to kind of learn, like, okay, well, gosh, how do you trade momentum in this market? And so if you're in the room, you kind of get first dibs on that stuff. And so you're going to be like, front row seats to all the stuff like that we're doing, which is great. Is this just options? What other trading do you do, if anything? So a lot of it's options. But the way I learned options was mostly directional. So, as an example, last week I bought calls on ServiceNow, or I bought some calls on Microsoft, and I bought some calls on Tesla. And if you're trading stock, if you see like, oh, John or whoever just bought straight up calls or a call debit spread on Microsoft, you can just buy the stock. And there's something to be said for that. If you've traded options, especially zero DTE, and you've had some work and some just blow up in your face, you really appreciate a stock that's got a tighter bid ask, has no expiration date, and doesn't have decay. So I actually like stocks. I don't post a lot of them. That's something I've been playing around with a few different things where I might do that more. But even if I'm buying a stock in my trading account, I'll typically mirror the trade with an option. So Haddock will be shown in all three levels of purchase. Yes. So it's all the same room. They're just different lengths of time. So if you want to do it on a monthly basis, and again, keep in mind that the $97 is an introductory rate for the first 30 days. After that, it will go to 197, which is actually a discount from what we normally do at 247. So this is just an opportunity to kind of lock that in. The only difference here is that the Elite actually comes with these the 11 different classes that talk about, all the tools and stuff that we use. But the cycle highs and lows will be included in all of those. And I think that's a fun piece. So the kind of the main one of the main differences here is I'm going to do my large account alerts, and we'll be posting the cycle highs and lows, and I've just found that they're really critical dates, especially for things like Bitcoin and tech stocks and things like that too. All right. Yeah, and the great thing about this too is that you'll learn kind of different styles. I can be pretty aggressive, and sometimes that can freak people out. Um, and but you'll have but other once you kind of get Chris is really great, especially if you read in the morning. Rogge is great on the macro analysis and different sectors that are moving. Taylor has this great ranking of stocks in terms of like their weekly, daily, and is this an A plus setup or anything like that, which it's just really, really intuitive, and it's great that way. Um, Henry is everybody's like, no matter what's going on in the markets, Henry is going to be your steady captain of the ship. He's not going to get freaked out by anything like that, which is great. And the list goes on and on. David is a combination of Elliott Wave and Voodoo. Lorna kind of is a master programmer behind the scenes and somehow can answer questions in 75 different rooms all at once, which is insane. Neil always reminds me that the that 87 level on the NASDAQ, you can't forget it. Bruce talks about more kind of things like butterflies and a little bit more of a kind of a portfolio manager kind of point of view. Danielle dives into squeeze plays and earnings. Cody's been doing some awesome stuff with prop trading. And then Sam likes to dive into, really solid kind of setups. He's got his own high-low pro indicator, which is pretty baller and focuses on crypto. And he's very I really his point of view on the world is pretty funny too, and that's great because you kind of get everybody's point of view in terms of what's going on and stuff like that too. Yeah, Robert, Robert's just saying I don't really know anything about options. I day trade stocks. That's awesome. And I think that options are interesting, but there's really something to be said for, and again, if we're buying calls on Nvidia and that fits with one of your, you can just buy Nvidia stock. And there's a lot to be said for doing that instead. I think the worst thing in options, say it's Thursday, you buy a Friday out of the money call and Nvidia goes up $3. So you're right, but it didn't go up fast enough and your call expired worthless. If you had bought the stock and it went up $3, you'd be up $3. And so that's one thing that you really appreciate about stocks. And how that translates into options a lot of times is, even though if I'm going to be in an option trade and I feel like I'm only going to be in it for 2 or 3 days, oftentimes I'll go out like 30 days and go in the money. So it mimics the price of the stock as close as possible. So I'm a huge fan of, stocks. When do we start buying puts? Yeah. So based on what we're seeing right now, kind of we got to get through FOMC, but possibly like May 9th from a cycle perspective is the time to buy some puts for like a one week or so kind of a pullback. And so that's what we're kind of looking at there. But are indicators included or purchased separately? Okay, so we do have a kind of a series of free tools, and then we have a lot of what I would simply call more premium tools. What'll happen is in your room, like things like the squeeze. Like a good example is the squeeze. There's a free version of the squeeze on Thinkorswim, and then there's also let me see if I can bring this up here. We'll have some tools that we like. This is more for day trading where, it's, momentum, and, today was kind of a choppy day, and, specific times. And as we're sharing stuff, we're happy to answer questions about it. And then once in a while we'll go through and, talk a little bit more in depth about what we're doing there. And if that's something that you would like, but a lot of times we're sharing the stuff too. So it's not necessarily what you want to do for swing trading. I mean, there's some basic things I like to look at. A lot of the stuff, these are just moving averages. This is the Squeeze Pro, so I do like that, and RAF Pro. Um, this is MACD and RSI. Those are free tools. These are Keltner channels and Bollinger Bands. Those are free tools. I really like this. This is kind of like I'm able to see squeezes on multiple time frames, different things like that. And so as you kind of get to know us and what we're looking at, you'll see some of the things we're doing. So if you remember, I was talking about TLT. So TLT, we're going to see a short-term peak. And now the idea here And of course, it can still get some back and forth, but the idea here is, can we now start to rally into June 5th? And again, it's not going to be straight up, but what we've seen is typically, after that, that initial top the first week, it falls for about a week and then rallies into the first week of the next month. And so I'm looking for that same thing this time around. So just things like that makes it more interesting to be sure. Yeah, so believe it or not, I'm still dialed in. I like the waves, especially the ABC waves. They're really great if you have a squeeze and the ABC waves are all positive. That's to me one of the best upside signals. And if you have a squeeze and the waves are all negative, that's one of the best downside signals. When those all line up, it's great. Yeah, we do have and we have different rooms. So this mashing the trade room does a lot of different things. We also have a small lot trading room that's geared specifically towards smaller accounts. We're trading typically 1 and 2 lots there. Allison does a lot of great trades in there with SPX in terms of um, she just has some really remarkable insights into options and be able to day trade with a small account. And so it's kind of fun seeing the kind of trades that she's putting on. If I'm doing a trade, in a large account where I'm buying Facebook calls, for $15, I'll pop into the small lot room and say, okay, great. Well, let's just buy a call debit spread for $2. Let's restructure this, for a smaller account. All right. Yeah. So anyway, this will be a lot of fun. Like I said, I'm not gonna lie, I've not been too enthused about the room over the last year or so, simply because the direction, again, I just didn't agree with the direction that the P firm wanted to go. Now that they're out of the picture, we can kind of do what we want to do, and that's a lot more exciting, more fun, and I think specifically more geared towards traders, things that make sense. We're all traders. We like to trade. All we want to do is kind of trade, share our trades. I get a lot of insights just from being in the room. I want to see what Henry's doing. I want to see what Taylor's doing. I want to see what other people in the room are doing. It's a community. Trading is lonely. If you're at home, the last thing my wife counsels other trading spouses, because guess what? If you're a trader, the last thing your wife wants to hear about is how that stochastic turned higher, and you almost timed the high with that. They don't care. Just as I don't care when my wife's talking about drapes and how many fabrics that she looked at it. I could care less. But I love the end result. I love the drapes that are on that are there. I just don't want to hear about, the 8 hours of time it took to sort through them. And they don't want to hear about your damn chart setup either. And so it is part of this is just having a community, save your spouse from yourself. They don't want to hear about that stuff. They like the results, and that's fine, but talk about, the angst and frustration and the joys and the sorrows of trading with fellow traders that understand what the journey is. Because I guarantee you that non-traders have no idea, no idea the internal things that are happening as traders are going through this stuff. And look, we should not, frankly, I'm of the opinion that you should not subject non-traders to, the mental ups and downs that traders go through. That's not their responsibility to deal with that. It's our responsibility as traders to deal with it and not, project that shit on other people that we love and care about. And so that's part of why you want to have a community where you can kind of talk through that with other traders that understand, and you're not subjecting your friends and family to the stuff that they honestly don't want to hear about. Just as you don't want to, hear them dump, their problems on you all day either. So good stuff. That's great, Bruce. All right, guys. Thanks for joining us. It's 8:17, so I don't want to keep you guys longer than an hour and 17 minutes. I will leave this page up here if you guys have any questions. Let us know. Super looking site. Tomorrow's FOMC day. That'll be a lot of fun. Typically the biggest move is after FOMC. I'll be in the room tomorrow morning. I've got my session, and then Thursday for the close. And then I've got a meeting in the afternoon. This always happens. So I'll have a meeting downtown when the FOMC is announced. So usually that means it's going to be pretty volatile. So that'll be pretty funny. All right, guys, have a fantastic evening. Thank you for joining us. Looking forward to seeing you in the room if you choose to spend your adventure time with us there. And take care.